Hello there! ICT is releasing video after video on his YouTube 2025 mentorship, and I'm here to break it down. We covered midnight opening range, and today we're gonna be talking about smart money concepts in terms of regular trading hours, opening ranges. This helps my Picasso's fair value gap strategy bunches. We're gonna dive into that in the second part of this video, but this is the third video covering ICT's YouTube 2025 mentorship, and in the previous video we kept you guys for quite a while, so today I'm gonna try to keep it short, stick to the point, and make sure that you have time to study the actual price action. So let's begin. We're gonna start this video just diving into it straight away into regular trading hours opening range, and I'm gonna say it out loud. If you want to become profitable, you don't even need to see the electronic trading hours to see what happens during the night, to see what happens during New York or London sessions. All you need to have on your chart is the regular trading hours. You can find the regular trading hours right here in the right hand corner. If you just push the button right here, you can choose whether you want to see electronic or regular trading hours delivery. I usually start my analysis, my day, with regular trading hours, which is good enough for me. What I want to start this video with is just showing you how the market really finds support and resistance while it's using the regular trading hours range, right? The previous week, Friday closed down here, with Monday opening a little bit higher. The marketplace comes back into that range, starts pushing higher. If you can see this, we invert this regular trading hours range up here, allowing the marketplace to fill it once more, push to the upside. We have a range here that has never been filled that we're gonna dive into what we can do with it and how to use that. And take a look how beautiful Friday delivery happens with the marketplace coming into the range, giving a little bit of a push away from it and possibly allowing us to define trade entries for the marketplace just to run higher, knowing the fact that the marketplace has found support. What I'm gonna talk about here is that every single time that we have a regular trading hours range, I want to see the range in terms of a quartile, right? Whether this is Friday open, and right here we have Monday open. Every single time I see the regular trading hours opening range, I want to see quartiles of that, right? I'm gonna put a Fibonacci extension. I'm gonna first measure the half of the dealing range, right? If the marketplace comes back into it, the midpoint of it is going to be very important usually. But what I'm also going to do, I'm just going to put down quartiles next to it, because quartiles are going to be something that we're going to use for the marketplace in terms of actual support and resistance levels throughout the day. Quartiles are done. What else do we have to know about the regular trading hours opening range? What we have to know and consider is that the marketplace usually is going to react to it as support resistance level for the next 3 upcoming days. If you're going to see a big regular trading hours gap like this, for example, the marketplace traded here, right? Closed on Friday, boom, Monday opens up, starts trading like that. If let's say we're coming into Wednesday trading right here and the gap is still not closed, I would very much expect the marketplace to come back into the range to close it, or at least tag it to start running higher. Okay, so 3 days is a very key factor, because the marketplace usually will want to come back into this range. Have it always on your chart. Maybe don't put it on to distract you. Maybe use another template to look at the charting itself, but I usually try to keep it on the side on the next template, so when I trade live on the 1 minute chart, usually it doesn't distract me too much. Okay, now third very important topic about regular trading hours is the sizing of the range itself, right? Usually I break it down into 3 factors. Regular trading hours range under 65 handles, we're talking Nasdaq here. Regular trading hours range in terms of 65 to 120 handles, this is our sweet spot. And regular trading hours range, which is higher than 120 handles. How am I using these 3 different, let's say, presentations of the regular trading hours range? First thing first, let's talk about the range that is less than 65 handles. Usually I'm gonna say right away that the marketplace is gonna be shit. The marketplace is gonna be something that doesn't deliver, and the marketplace is gonna seek and destroy your every single position that you're gonna open up. The marketplace will possibly not run towards liquidity that you're willing it to see, and so on and so forth. Everything below 65 handles is something that is very, very hard to understand and very hard to initially work with. 65 to 120 handles is going to be the sweet spot. How to use that, we're going to make another video coming next week for you guys. ICT covered it, so why not cover it ourselves? And regular trading hours above 120 handles, which is the most usual regular trading hours range, is something that we're going to dive into today. So initially we're going to focus on 120 handles, which happens the most of the time. And if we have the regular trading hours range which is above 120 handles, what will happen? Usually the marketplace will deliver 25th percentile of the opening range itself. The marketplace is going to open up on Monday, trade around, pull around, it's going to tag the 25th percentile, and it's just going to run. What I'm saying here is that the marketplace, when it has a big regular trading hours range, is not going to be looking to close the range the same day. It's only gonna try to tag it, start running away from it. It's gonna look to offer you a trend entry at the 25th percentile of the range itself. Okay, keep that in mind. This is going to be very important in terms of going onwards. Before going onwards, I'm going to say it as I do it in every single video. If you enjoy what we're doing here already, leave a like to this video, subscribe to the channel. You're missing out if you're not doing that already. And if you want more content that we produce every single day, check the description of this video down below. You're going to find the free 7 days trial link towards the Discord community that we're running, which has over 100 people already in it. So I'm very excited in seeing you there. Now, coming back to the video, coming back to the regular trading hours opening range. Let me say that most of the growth for you guys will happen once you will start realizing that first presented fair value gap is going to be a very important factor for the regular trading hours range, and using the size of the range to understand whether that first presented fair value gap is gonna support or reject the price, whether it's gonna get inverted, whether it's gonna become a Picasso's fair value gap, or whether it's gonna just offer you a run towards liquidity, closing the whole regular trading hours range. That will come with experience. That will gonna dive in together through the series of this video, but just trust me, don't rush it, take your time, it's gonna come, it's gonna click at some point. In other words, what I'm trying to say here, just like the time is important in price action, time is gonna be very important for you in terms of figuring this out. As we say, nothing random happens here, so time is gonna be of the essence for you guys. My suggestion in terms of using the regular trading hours range is gonna be this. Keep the question constant in your mind, whether we should go to the 25th percentile of it, whether we're gonna cover the 50% of it, or maybe we're gonna close the regular trading hours overall, knowing how big it is. Sometimes you will see that I will trade at 8:45, for example. Sometimes I will say that, listen, I'm waiting for 10 a.m. And sometimes you'll see me doing things that are very unexpected, that are coming just from simply understanding the range and simply from experience. Summarizing this video, I'm keeping it short. I'm keeping it very price action, not heavy for you guys. Remember 3 things. Remember the quartiles for the regular trading hours opening range itself. Remember to note it, right? The previous day close, today's open that happens at 8:30, and always think about how big the range is. The bigger the range, the lower the probability of the marketplace coming back to close it fully. But remember that if double bottom, for example, like this, is resting down below, and you see the quartile in terms of the marketplace giving you a big regular trading hours range, this is a big opportunity for the marketplace to go down there. The last 2 videos you watched, even including this one, is laying already a good foundation for you in terms of where we're gonna dive, where we're gonna look deeper into the marketplace. And with this in mind, I'm gonna offer you to go in and study these opening ranges and see how the marketplace beautifully delivers and how it uses these ranges to find support and resistance levels. And if you really want it badly, if you wanna escalate your growth, my mentorship is still open. We're gathering a new group for the mentorship coming up this March. So if you're interested in that, just let us know. And for today, this is gonna be it. I'm gonna see you next time. Bye bye.